Like you heard, I just mentioned there was a market shutdown on Wednesday. Traders say that this was brought on by offshore investors. Now, as a result, we're seeing yields dropping. There was a sudden drop in yields to less than 14% from the 15.2% we saw it at on Monday. Now, give us a picture of what is the situation, what is really happening, what does this mean, and certainly where does the market stand now? Is trading still going on?
From the offshore and one-way calling, tradings are going on. But from the two-way market, in terms of giving quotes by banks, we have not seen too much of trading there. Though you have some few also trades going on the ICAP platform. The reality of it is that the sudden drop that we have seen in the yield and the rate at which they have moved so fast is really because of the fact that the majority of the banks are not trading. If the banks were trading, definitely we will have still seen the yield drop, but not probably as significant as this. What actually happened on Wednesday was that we have some couples of customers that came into the market, but rather than probably calling the banks directly, decides to go through the brokers. And the way the brokers operate is that they call right everybody, and that really changed the dynamics of the market. Whatever levels that you offer, you are lifted, and so everybody was at a panic state. And so what we now have was that you have a situation where people that were using just small amount to push up the prices, and that is why we saw those kind of significant drop in yield. The good part of it is that at this point we've moved from between 15.2% in terms of yield and dropped to about 13.9% in yield. And at 13.9, 13.8, and 13.7, we saw some offshore who have bought these bonds about 2 weeks ago are now willing to actually sell. So you see a lot of cross trades going on between the offshore guys or coming through the local players also to still settle a lot of large tickets.
Well, Dare, this certainly should have some impact on foreign exchange. Is there going to be any impact at all?
Yeah, we're probably going to see impact, but the impact is not going to be as significant to the extent that you have offshore holders willing to sell. Now, for those of them that will sell, will they be taking out the cash? If they will be taking out the cash, therefore those that are new entry are also willing also to bring in the cash. So that would be like a net. So in terms of the massive flow, we might probably not see, notwithstanding the fact that it's still the offshore that is buying. But to the extent that they're not buying from the local players, means that you probably not see too much of foreign flows into the market. But because they're buying from the offshore, so it might be a net. But depending, if the guys that are selling, as in the clients that are selling on the offshore, if they are not taking out the cash, if they want to reinvest in other arm of the economy, they will probably still see significant flows of dollars coming in. Especially from today, we might probably start seeing that. The exchange has remained stable because we've gotten a lot of support also from the local oil companies. They have been selling and they've been doing good sizes to augment whatever is coming out of the WDAS.
Well, Dare, then certainly in terms of your outlook for the week ahead, you're seeing it sort of easing and the situation turning around. I mean, give me a clear picture of what your outlook is for the week ahead.
Now, looking at from the mark-to-market that came out yesterday, and then in comparison with the current inflation level, I think you're probably going to see some levels of correction happening very soon. We have a situation now where that the 20 years yield is actually lower than inflation, and that is at that particular, though not so much transactions are happening at those maturities, but not that said, the 10 years, which is really the hot cake that all the offshores are going for, the yield is also getting very close now to inflation. So at that levels, I'm sure that it's going to be some levels of a slowdown. And once the slowdowns happen, then you probably see the yield probably each up back up slightly. But that said, also you also have to look at the fact that the expectation for inflation is that it's still going to probably for that drop. And so we might still see some little more buy. But in the short term, you might see some slowdown.
Talking about the short term, Dare, I mean, we do have an auction coming up on Wednesday. There'll be a T-bill auction. We're going to see about 142 billion naira on offer. Give me a picture. What's your expectation?
It is a 1 year yield currently is about 15%. So that is very attractive compared to where all the other long dated instruments are. So you're probably going to see a lot of demand at that window. So we don't expect that the yield, effective yield for 1 year will still remain at 15. We expect it to probably to drop to around 14. So you're going to see so much demand going into that auction, especially also from the local players who will have lost out in the yield drop that has happened in the long dated, which is the bond. So they will probably want to take advantage and buy some of the T-bills and still get good yields in their books.
We'll be watching that, Dare, but let's turn our attention to foreign exchange markets. First, I want to talk about the WDAS auction. I mean, on Wednesday, we saw the CBN selling $180 million. Now, suddenly, it seems like there's not so much demand for the dollar as we had earlier this year.
The dynamics from clients is that once exchange is appreciating or stable, they tend to slow down. They don't bring forward their obligation, their future obligation. Now, that is what the trend has been. We've seen the situation where we're coming from a 164. We have been at 157, 158, and we have been stable at that level. So it makes really not too much of panic. And all the news that are coming out is the fact that you're probably still going to see more of offshore flows. Then as a client, you don't need to really panic. So that is what has affected positively also the central bank in terms of the WDAS. Unlike before, if there was so much demand and they are offering $180 million in an auction, then you see that the rate will have gone up, far more than what we have seen. So, but now we have like more of a stable exchange, and I think it's going to remain like that for a short time.
Well, Dare, I mean, I just want to quickly check in with the interbank rates. We know they hit the roof early last month, and now traders are saying they're sort of moderating. Where are they currently?
Currently, overnight rate is around 13%, and for you to go to CBN window to take money will be about 14%. So to that extent, what has really helped in terms of bringing down that rate was because of the, remember the circular that came out was what really changed the dynamics that prevents banks to go to CBN window on an auction day. That has changed because now exchange is stable, and there was even a time that exchange was actually trading below CBN. So you rather buy from interbank than go to central bank and incur so much in terms of your funding. So and that has been what has really helped the fact that exchange has been stable. Banks are not under the pressure to go to CBN window and to buy, because they can easily buy from the interbank. And on the other side of it is that the liquidity in the system also has been stable, and because of that, there is really not too much pressure in going to CBN window. So you cannot actually take money from the interbank market, go to CBN WDAS and buy dollars without breaching any of the rule. And even for the auction that is coming next week, is in and out really, because you have 142 billion maturing and then you have 142 billion on offer. So it's a cash flow of net zero.